Did you know that the global silver market is facing an extremely dangerous hidden crisis? Silver reserves in China, the world's largest silver consumer, are depleting so rapidly that the country could be completely out of stock within just a few weeks. Meanwhile, Western markets are losing control as physical silver prices begin to diverge sharply from paper prices, creating signals not seen in decades. Everything is pointing toward a historic breakout that if you miss, you may regret for the rest of your life. Background and the early warning signals emerging beneath the surface. In recent times, the global silver market has shown a series of unusual and quietly escalating movements. Despite the persistent turbulence, most mainstream media outlets barely mention these developments or address them only vaguely. Yet a deeper look into financial reports and data from major international institutions reveals that a powerful undercurrent is forming, a large-scale shift in assets that current surface prices do not fully reflect. Independent analysts and major Asian media outlets have begun issuing warnings. Bloomberg, citing new figures, reports that China's holdings of U.S. Treasury bonds have fallen to the lowest level in nearly a decade. The fact that such a large and influential economy is quietly reducing its exposure to U.S. debt suggests an ongoing restructuring of the global financial system. This shift not only affects global capital flows, but could significantly influence precious metals like silver, which are highly sensitive to geopolitical tensions and changing demand for financial hedging. These silent changes are laying the groundwork for a new era of instability that investors cannot afford to overlook. China's silver inventory crisis. Clear signs that supply is approaching a dangerous threshold. In recent months, Asia's precious metals market, especially China, has been facing a silent but extremely severe crisis, a dramatic collapse in silver inventories. At China's two largest exchanges, the Shanghai Futures Exchange and the Shanghai Gold Exchange, data shows that silver reserves have been declining for months with no sign of recovery. The withdrawal rate is so fast that if it continues, China may face a complete empty vault scenario within about 9 weeks, meaning there would be no physical silver left to support manufacturing or trading. This is especially alarming because China has long been the world's largest silver consumer. Most of its silver demand comes from industrial sectors, solar panel manufacturing, semiconductor components, medical equipment, chemicals, and consumer electronics. With high-tech industries expanding rapidly, any disruption in supply becomes more dangerous than ever. Typically, when reserves drop, China increases silver imports to replenish stocks. But this time, the opposite is happening. Instead of importing more silver, China is unexpectedly shipping a significant amount of physical silver from domestic reserves to the London market. This puzzling move has analysts asking, is the Western market facing such a severe shortage that China must rescue it? The reversal of the usual flow from a major consuming country toward Europe's financial hub suggests there may be undisclosed problems in the global supply chain. Additionally, spot silver prices in China are currently much higher than international prices. This price gap is direct evidence of genuine domestic scarcity, where demand overwhelmingly surpasses available supply. In an economy where strategic industries depend heavily on silver, such shortages could trigger a domino effect with global consequences. These developments confirm that China's silver inventory crisis is no longer a distant risk, but a clear and present threat to the worldwide supply structure of this critical precious metal. Physical versus paper markets, when the global silver pricing system begins to break apart. For decades, global silver prices have primarily been dictated by paper trading, futures contracts, options, and derivatives exchanged on COMEX. The volume traded in these paper markets far exceeds the actual amount of physical silver that exists in vaults. This imbalance creates an artificial pricing mechanism. Prices are held down and shaped by paper contracts worth dozens or even hundreds of times the real underlying metal. As long as confidence remains strong, this system works. But once confidence begins to erode, the entire structure becomes as fragile as a castle built on sand. Today, signs of that fracture are growing impossible to ignore. For the first time in many years, the silver market is experiencing backwardation, where spot prices exceed future prices. This is extremely rare for precious metals. Backwardation reflects a simple but alarming truth. Buyers no longer want to wait for future delivery. They want physical silver now. Demand for immediate possession is so intense that the market cannot keep up, forcing spot prices upward. The emergence of backwardation also proves that the paper market can no longer conceal the physical shortage. For years, global silver supply has failed to meet annual demand. Data shows that supply sits at roughly 850 million ounces per year, while real demand surpasses 1.2 billion ounces. The enormous 350 million ounce deficit has piled up silently, masked by layers of paper contract, until the physical market became too strained to hide the imbalance. More institutional investors are now demanding physical withdrawal instead of cash settlement. Vaults are being drained faster than expected, while paper trading volumes continue to climb. The gap between the paper market and the physical market is widening, undermining the credibility of COMEX's traditional pricing model. If this trajectory continues, the paper market could face a dam break moment, where physical silver prices explode beyond the system's ability to suppress them, setting a new price floor that reflects true global scarcity.
Technical analysis. Silver is being compressed and is preparing for an explosive breakout. In the short term, technical indicators show that silver is entering a tense accumulation phase, much like a tightly compressed spring. The cup and handle pattern, one of the strongest and most reliable bullish formations in technical analysis, has clearly emerged on short-term charts. Once this pattern completes, the market typically enters a powerful breakout phase with steep upward movement. The key resistance level sits around $30 per ounce. If silver breaks above this line with strong volume, analysts expect price targets ranging from $50 to $63, depending on the method used to measure the cup depth. Yet the real story lies in the long-term outlook. Across a chart spanning nearly 45 years, silver has formed an exceptionally rare megascale cup and handle pattern, stretching from the early 1980s to today. Patterns of this magnitude often correspond to historic market cycles. Should silver decisively break through this long-standing resistance, it could enter its strongest growth phase since the explosive silver rallies of 1980 and 2011. Even more telling is the declining effectiveness of the price suppression tools in the paper market. For years, futures contracts have been used to cap silver's upward movement, but as physical demand overwhelms the capacity of the paper system, these downward pressure tactics are losing their impact. This signals that the market is approaching a limit, a moment when decades of accumulated pressure could be released in a massive and historic upward surge. Industrial demand and retail investors, two catalysts that could ignite the next major silver bull run. One of the most influential forces reshaping the silver market comes from industrial demand, which has been rising for many years and is nearly impossible to replace with alternative materials. Silver plays a critical role in major technological sectors: electric vehicle production, solar panel manufacturing, semiconductor fabrication, medical devices, and consumer electronics. As the world accelerates green energy adoption and expands high-tech infrastructure, industrial silver consumption continues to exceed global supply capacity. Alongside industrial demand, there is another, potentially decisive but currently dormant catalyst: retail investors. Surprisingly, despite mounting tension in the silver market, most small investors have not yet entered the space. This creates enormous breakout potential. Should retail capital flow into silver, as seen previously with gold, cryptocurrencies, or energy stocks, the market could experience sudden and dramatic price surges. When these two forces are placed into the broader context, including technical setups, ongoing supply-demand imbalance, and long-term market psychology, it becomes clear that the silver market is aligning all conditions necessary for a major breakout. This is a phase of stored energy, awaiting only a single spark to unleash the next powerful bull run. Overall conclusion: the global silver market is entering an unprecedented phase in modern history. Taking a comprehensive view of global silver developments, it is clear that a major shift is underway. The market is approaching a potentially historic cycle of volatility and growth. First, the rapid depletion of silver reserves in China, the world's largest silver consumer, is progressing at a pace that cannot be ignored. Shanghai vaults have been drained for months, leaving a widening gap in industrial supply chains. This is not a temporary anomaly, but a direct signal that global silver supply is under severe stress. At the same time, the divergence between physical silver prices and paper-based silver prices is widening. Physical silver is trading significantly higher than futures contracts, revealing a genuine imbalance between real-world supply and demand, an imbalance the paper market has attempted to mask for years. Equally important is the occurrence of backwardation, where spot prices exceed future prices. This rare phenomenon in precious metals typically appears only during periods of extreme physical tightness. Against this strained supply-demand backdrop, technical indicators amplify the urgency of the situation. A multi-decade cup-and-handle pattern is nearing its breakout phase. If silver breaks through this long-term resistance, it may not simply rise, it could enter a historic bull run. With all factors, technical, structural, psychological, and monetary converging at the same moment, the silver market appears to be approaching a phase that many experts believe could produce one of the most significant price surges seen in decades.